It's a new business week. Good morning and welcome to Business Morning on Channels Television. I'm Amy John McQuarrie. Thank you so much for joining us. Well, let's start with update from the global oil market. Oil fell today ahead of an OPEC Plus supply policy meeting that may decide whether a recent rally in prices can be sustained as the world fitfully recovers from the COVID-19 pandemic. Brent crude was down 24 cents at $79.04 per barrel. It rose 1.5% last week. Its fourth weekly gain in a row. U.S. oil dropped by 27 cents to $75.61 a barrel after rising for the past 6 weeks. Oil prices have risen amid supply disruptions and recovering global demand, pushing Brent last week to an almost 3-year high, which was above $80. OPEC is scheduled to meet later on in the day, although the earliest any increase would take place would be November, since OPEC Plus last meeting has decided October volumes. The oil price rally has also been fueled by an even bigger increase in gas prices that have spiked 300% and are trading around $200 per barrel in comparable terms, prompting swift switching of fuel oil and other crude products for generating electricity and other industrial needs. Well, we come back here to Nigeria, where Montblanc, a leading global maison for luxury business lifestyle, has opened its first Standard One boutique in Nigeria, together with long-standing partner Polo Luxury. Located in the Palm Shopping Mall in Lekki, Lagos, Nigeria's premier lifestyle and shopping destination, the boutique offers an immersive retail experience with dedicated areas for watches, writing instruments, leather goods, accessories, and Montblanc's growing range of technology devices. The luxury maison adds a new dimension to its mall's luxury offering with new design concept by French designer and interiors. This is how the event went.
You wanted it, you wished for it, you waited this long for it. And after 30 years of its first entrance into the Nigerian space, the luxury maison Montblanc is opening the first standalone boutique exclusively for all the products associated with this brand. Montblanc says it is delighted to be doing this with its long-standing partner Polo Luxury in this key African market.
For the first time, we bring in Nigeria the last concept of this new boutique, where you can clearly identify all the categories. We can expose all our art of writing editions, leather just behind me, as you can see, and the beautiful watch making.
Montblanc clients are said to be fastidious. They are ever desiring. They value the service, which is what they will get when they come to the newly opened boutique here in Lagos.
These values we both bring together, and as we share these values, it has strengthened our relationship. Plus trust. Trust is very, very basic in any relationship. And if you can keep that trust and try to keep your operation at a global level, emulating best global practices, then of course you should have an outstanding outcome, such as we are witnessing today.
So why travel to Paris, Dubai, South Africa, New York, or Milan for these collector's items?
We're going to serve the corporate market and the fashionable, trendy markets also.
Montblanc has brought its crafted writing instruments, timepieces, their leather world, and more to Nigeria. Early callers can be spotted clutching the moment. The new boutique also includes a collector scanner showcasing a number of sought-after collector pieces that will be generating interest across the continent, and an impressive ink bar experience offering customers the chance to test the full spectrum of Montblanc writing instruments, nibs, and inks.
Well, Nigeria is still in the independence celebration mood. The President, Muhammadu Buhari, has called the last 18 months the most difficult in the history of the country. But of course, the impact of COVID-19 has been global. The government has also re-strategized to deal with the effects of the pandemic. Well, let's take a moment and listen to part of what the President said on the 1st of October, as it will form the crux of our first discussion this morning.
Our focus on revamping the economy through the national economic diversification agenda that supports the primary goal of national food self-sufficiency. This has helped reduce the growing food-related inflationary figures and have in considerable measure positively impacted on our food security status during the long months of the pandemic lockdown. We are also currently rebuilding our national infrastructure base and in the process introducing transformation through the rehabilitation, modernization, and expansion of the railway system, national roads and bridges both in rural and urban centers alongside the airports and seaports. The reforms we have put in place in the power sector would guarantee increased efficiency in our drive to significantly expand the generation and distribution of electricity for use in homes and factories. With the recent opening of our borders, we expect that the pent-up demand of legitimate cross-border and international trade will boost the fortunes of the many small businesses and agricultural enterprises that depend on Nigeria trade and commerce. The message to our West African neighbors is that Nigeria is once again fully open for those willing to conduct business in a fair and equitable way.
Well, that was part of the speech of the President on the 1st of October as Nigeria celebrated 61 years of independence. And to discuss, well, the economic side of that and the administration's effort, we have with us a former Deputy Governor of the Central Bank of Nigeria, Mr. Tunde Lemon, to talk about what the President has called re-strategizing of the government's policies to deal with the economic impact, especially of COVID-19, among other challenges. Good to have you, Mr. Lemon. Good morning. Thank you so much for joining us.
Good morning, Ine. Thank you for inviting me.
Good to have you, sir. So we had part of what the President said. I'm sure the speech of the President has been everywhere since Friday. He talked about re-strategizing to curb the impact of COVID-19. Obviously, COVID-19 is a problem not just in Nigeria. I mean, the impact has been global. How would you assess the re-strategy of this administration in dealing with the impacts of COVID-19 and other challenges that the nation has had to face?
Thank you. We had the government loud and clear through the President. And also last year, so much was said about revamping the economy and re-strategizing. Unfortunately, while government is seen to have tried its best, particularly given the circumstances in which they find themselves, we do not have enough fiscal space. If you combine everything that they did, central bank intervention, the fiscal authorities intervention, all of that, when you sum it up, is less than half of what should have been done. Our comparators in West Africa, in Africa, probably did so much more. I'm not sure we did up to 4% of our GDP when our comparators have done much more. But unfortunately, we can't blame the government today because the space, the fiscal space is not there. It's just unfortunate because we've been saying this time and again that we needed robust reserve level, which should have assisted us. Recall that about 10, 15 years ago, when we had the global financial meltdown, we were able to deal with it better because we had robust reserve buffer. But today, our reserve level is just 34 billion. And then when you look at what government can do, it's so little compared to the issues that we have on ground. And that is the situation in which we find ourselves.
But there has to be a way out. There has to be a way out of this seemingly tight corner that the country is in.
Well, the way out today is for us to first and foremost block the leakages. Unfortunately, since the return to democracy, we have been ramping up spending on governance, you know, so much now that when government releases budget, only 30% of it goes into capital expenditure at the best. I mean, that is what is budgeted. The real expenditure usually is below 20. And the rest goes into salaries, overhead, and so on and so forth. This is the situation we find ourselves. We need to go back and begin to think how we can reverse the trend so that we can free up money. Besides that, we have humongous debt capita in Nigeria, which is estimated at around 900 billion US dollars, about twice the size of our GDP. We should begin to see how we sell assets, reduce our debt stock, and then free up money to be able to do this. Waiting until we have enough money will not help matters. Our infrastructure is in decay. It's very, very seriously impacted negatively. Look at textile industry, for instance. When we had independence, the first 10 years, the Chinese and the Indians came here and set up textile companies. At the peak, we had over 170 textile companies. But today, all of them are folded up. Only 6 or 7 are in operation, albeit marginally. The reason is because the infrastructure in those climes, China and India, is much better than what we have now. So we need to free up resources beyond what government can do, and then harvest all of this and put aggressively into revamping our infrastructure and also freeing up resources to create employment.
But isn't that,
unemployment rate is
isn't that why the government is taking, when we talk of the loans are basically to, you know, revamp the infrastructure, to make employment and access to businesses, ease of doing business easier. Isn't that what most of that is for?
Our loan stock is very high now. Currently, we have 34 billion US dollars. And when you add credit by central bank to the federal government as well as AMCON, we are actually talking about 54 billion US dollars. This is pretty high. This is about 5% of our GDP, and is really, really very high. A lot of people say that it's not high because of what our peers are doing.
And then our limits too,
but
debt limits.
Our credit, we busted our credit limit, and taking more credit would actually hurt our economy. And then besides, ability to repay is becoming a big question mark. Today we federal government spend 97% of revenue servicing
service
debt.
loans.
And if we're not careful, it's a slippery slope to bankruptcy, which is why I counsel that we should aggressively look at how we can reduce the debt burden by selling debt or non-core assets.
But I mean, a lot of people, because we've talked about the issue of the debt stock in Nigeria a couple of times, and some analysts have the perception that it's not about how high the figure is, the debts is, but what is actually being used for. If it's, for instance, being used for infrastructure, then the spillover effect is going to make even payments easier.
That sounds easy theoretically. Let's take the case of railway, for instance. We went to China, we borrowed money, we fixed Lagos-Ibadan. But is that going to repay the loan? I doubt it very much, because I have friends who have been taking the trains. You have to pay cash, you have to physically get to Ebute-Metta to pay. And then when you look at the way it is run today, we are not going to pay that debt from the revenue derivable. My take is that we should actually privatize this particular sector.
Sorry, sir, let me interrupt you. When you say we are not going to be, is it because you don't have the market for it, or because it's not being run transparently?
Well, I think it's both. Because when you look at the way it is priced, today, if you are going from London to Manchester by rail, you pay almost double the price you pay when you are going on a coach. But in Nigeria, it's only 4,000 from Lagos to Ibadan.
Which people still say is expensive. But which people still say is expensive.
It's not expensive because this is capital intensive. And when you look at the ease, when you look at the value you derive, mark you, that is even business class. Economic class is, I would say, 1,500 or 2,000, which is very, very small. It's supposed to be slightly more expensive than going by bus or whatever, because it takes you there faster, there is no hold-up, there is no stress, and so on and so forth. And until that is done, we would not be able to recover, to be able to service the loan. That's my worry about this. If you can free up, if you can get the private sector to run those institutions, we will get better value, and then we'll be able to service.
And then we also, of course, have the discussion on diversification, because if we are talking of boosting the economy, then we need to increase our source of revenue, you know, if we want to boost our revenue and be able to meet up with responsibility. How is that going? Well,
you see, when you look at the composition of our GDP, we are diversified already. But the problem, of course, is that the private sector cannot ramp up activities at the pace that they should, because we don't have good enough infrastructure. If we have good enough infrastructure, we'll then be able to have a private sector that will be more vibrant, and we'll be able to create more jobs, and so on and so forth. People say that our economy is not diversified. I beg to disagree. It is. When you look at the GDP composition today, look at what telecoms is doing, look at what so many other sectors are doing. But I believe that what is happening is that we've not been able to unleash the potentials we have in the private sector because of so many things: security of life and property, decay infrastructure, ease of doing business. All of this is what we need to do to be able to create that jump that we need. We need to jumpstart this economy by encouraging the private sector, and this is the sector that will actually create those growth that we want, not government. So when you talk about encouraging the private sector, the government has talked a lot about the ease of doing business, which I believe, you know, is to encourage the private sector. We also see a lot of fintechs coming up when you talk of ICT. What other encouragement would you expect to see? Thank you. Let's take ease of doing business, for instance. We have improved by 1 or 2 notches. But again, are we as competitive as our comparators in Africa? Look at Ghana, look at Egypt, look at Kenya. I believe we're still far behind. So that we even still need to do. Some of the regional, some of the economic activities that are happening, you will be surprised that even Ghana is a better destination for foreign investors than Nigeria. And the reason, of course, is because, yes, we pride in saying that, we have improved on ease of doing business, but if we are improving from number 90-something to number 70-something, and our peers are number 4, 5, 6, then you know that we still have a long way to go. And how do we do that? First and foremost, we need to ensure that the private sector, the public sector units and agencies that are involved actually become much more efficient. Let's look at the best 3 countries in Africa and give ourselves targets. We are going to surpass this because, you see, the global economy is becoming more and more competitive, and everybody is trying to ensure that they improve efficiency to be able to access global capital. And so, apart from that, government needs to work more on security of lives and property. Unfortunately, we've had this so rough in the past 2 years. And I want to appeal to political authorities. This is not about politics. Let's have a bipartisan approach. Let's all sit down and see what we can do. Government, non-government actors, private sector, and let's sit down and see how we can get all these problems behind us. Today, the entire Middle Belt is becoming problematic, and this is the belt that produces food. No wonder we have food inflation that is around 21%. And how will this be that we don't have a stable macroeconomic environment, and we are hoping that we'll be able to do this? We must do that. All the things underpinning stable macroeconomic environment, which is monetary stability, responsible fiscal financing, and so on and so forth, are the areas we need to work upon so that we can be able to create the necessary environment. All right, Mr. Lemo, just before we let you go, the inflationary figures have tapered in like 3 months now. That should be a plus. Has that had any impact? For me, why should it be a plus? It's very marginal. And don't forget, some of the so-called improvements we are seeing is just as a result of the cycle and then the base effect, because you find out that inflation spiked, and then, of course, because it tapered a bit, what is it now? 17 point something%. That cannot take us anywhere. You see, just yesterday, we were reading a report about Germany. They are worried that for the past 29 years, inflation number went up to 4.1%. Can you imagine? And that is causing worry. Yet in Nigeria, we are celebrating improvement inflation numbers from 18% to 17 point. Actually, it should be 17.5. This indeed is what we need to do. Central bank and other institutions should sit down and see how we can work so hard to bring our inflation number to lower single digits, not even 9%, 3-4%. Others are trying to do that. That is when our currency will be stable, and that's when we'll be able to drive the stable macroeconomic environment.
A lot of conversations to have, because we also have the reality of the inflation figures apart from the inflation reports. We have to leave that for another time. Thank you so much, Mr. Tunde Lemo, former Deputy Governor of Central Bank of Nigeria, for joining us this morning for this conversation.
You're welcome. Thank you.
So we'll take a break now. After the break, we'll continue this conversation and we'll look at the digital transformation of the Nigerian Exchange Group, especially as the country celebrates 61 years of independence. Join us. It's Business Morning on Channels Television. You're welcome back. Well, as Nigeria celebrates our 6 years independence, digital transformation at the Nigerian Exchange Group gains momentum, especially as the Technovation Conference, which was held last week. The Chief Executive Officer of Nigerian Exchange Limited, Mr. Temi Kupola, speaks with us now on how the NGX plans to drive this transformation and other development at the exchange. Good to have you, Mr. Kupola. Good morning.
Good morning. Thank you very much for having me.
Good to have you. Well, what were some of the take-home points from the NGX Technovation Conference that you held last week?
Okay, it was really an event that we had arranged to bring together most of the players within tech, fintech. You spoke about ICT, for example, with the previous speaker, previous guest that you had. So the exchange, post this corporate restructuring that we just had, the demutualization, one of our strategic pillars now is a focus on technology. And this really is what the event centered around. When we think through technology, it really is along a few, I would say, dimensions. First and foremost is how do we engage more with our consumers through technology? You think of that as a last mile delivery through technology of the exchange's products. Secondly, is really how do we then attract tech stocks and tech companies to the exchange? The exchange would like to be a venue for capital formation for technology companies in Nigeria. I think that there's general agreement that the companies of the future and really perhaps the driver of a lot of the economic activity in Nigeria going forward is through technology. So we spent quite some time really thinking through how the exchange can position itself to be helpful to this ecosystem. And then thirdly, of course, is everything around advocacy, regulation for technology, how the exchange can help to bridge that divide between what the techpreneurs do with what regulation also asks to be done on sort of the other hand. So this really is what the event centered around. And there were lots of just thoughts and ideas really about how the future is now ultimately what sort of technology themes will be driving both the country and the markets going forward.
Well, very interesting points you made there, talking about engaging your customers, attracting tech stocks and advocacy and regulation. But taking it away from the conference to the implementation, what's the game plan? What's the implementation plan? What changes should your customers expect to see and when?
Okay, thank you very much. So one of the things that we've done, if we speak, for example, on the subject of capital formation of technology companies, and if we go back to the basics and ask whether tech companies can list easily today on the exchange, whether as a means to raise capital or whether as a means for liquidity for those who already invested in the companies, the answer is that there is work that needs to be done. So we are taking a look, for example, at our rules. We are asking ourselves also if we can be a little bit more innovative as we look to court technology companies. So all that body of work, which is on one part internal to NGX, but on the other hand, external to our regulator, the SEC, that body of work is currently going on so that ultimately we can, have a platform and an exchange whose rules and whose sort of governance requirements are things that we think that technology companies will be able to meet. The other bit around what I spoke earlier, the last mile distribution of our products, really how can we, through technology, interact more with retail investors. That body of work also we're doing not just by ourselves, but coordinating with stakeholders across the capital markets everywhere, including the SEC as well, the apex regulator, to be able to meet, for example, millennials. You'll find that millennials are not actively engaged today within the capital markets. Part of the reason for that is that we need to meet these millennials where they actually spend time, which is on their sort of mobile devices or tablets. This sort of work that we're doing. And then thirdly, is internal to our exchange. One of the things that you will find, and we'll discuss this at length, is that the exchange today is actually highly digitized. We have been trading remotely now for close to 2 years, and it's not been a single day of downtime. I think that speaks really to how much technology has been embraced at the exchange. Started to register and to license what we'll call sub-brokers with a digital platform, which also should help further distribute offerings through technology. So really today, the technology discussion is around the exchanges digitized. How then do you take, if you want to call it a vertical integration further through technology to the last mile? If you look across the banking sector, this has been done. You can today very easily on your phone, in the space of minutes, from being unbanked, get access to the banking sector and to the financial system. We're really trying to answer that question for the capital markets.
So you also talked a lot about partnerships at the conference. I would like to know what partnerships have been built or are being built to advance this technology adoption that you talk about in the Nigerian capital market. Because I asked this because when the central bank came up with the e-Naira and then announced that they're working with Beat Inc., there were a lot of conversations around that. So I'd like to have an idea, the direction that the NGX is taking in this area.
Okay, thank you very much. I think one of the benefits of this demutualization process that we've gone through is that it does free up then the operating exchange, NGX, to be able to get into partnerships with partners that perhaps may have been a little bit more difficult decisions to have made when the regulation business was attached to the exchange. So partnerships here would be really partnerships with a lot of our stakeholders, partnerships with our regulator, partnerships with companies within ICT, companies in the telecommunication space, partnerships with financial institutions. If you look in the banking sector today, one of the trends is sort of an evolution to a holdco structure by banks. And in those holding company structures are verticals that relates to capital markets. And we've been looking really to enter into partnerships with such institutions. If you think about the fact that many of those institutions have a reach and a depth that we don't quite match in the capital markets today, this is really how we're thinking about partnerships and the future. And then, of course, partnerships with international partners, exchanges globally, and all the sort of capital market operators globally are the sorts of partnerships that we'll be looking to enter into.
So the Corporate Affairs Commission has completed the incorporation of the Nigerian National Petroleum Company in line with the provisions of the Petroleum Industry Act. What does this mean for the NGX?
What I would do here is I'll just stick with publicly available comments. I think that publicly the NNPC has spoken about a potential listing. This has been in sort of public discourse recently. And so we at the NGX, working with, again, our regulator, are doing everything that we can to make sure that they're prepared for such an activity as they sort of make their decisions. But I think over and beyond, what it does also is the signaling. You spoke earlier with your prior guest about the ease of doing business. I think that a move like this that we've seen around this very key piece of very important legislation does demonstrate that Nigeria is open to business, that Nigeria is open to investments. And I think that there then is a knock-on effect of that sort of wider to the capital market. So I think these are some of the benefits there. Of course, also it opens up the NNPC to other forms of financing. We are making our markets available to the NNPC for sources of financing, whether that's through debts, whether it's through equity, like we spoke to the listener, or perhaps a combination thereof, are some of the things that I think that this announcement allows them to do.
All right. Nigeria is celebrating 61 years. The NGX is celebrating 60 years. What's the outlook for the rest of the year, the first quarter of next year? What should we be looking forward to from the NGX, especially as you make boast of your demutualization and, of course, the technovation that you are inculcating into the running of the NGX?
All right, your question nearly threw me off. Normally, I've heard questions like, "What's the next 60 years?" I haven't heard next 6 months.
Well,
so
I like to be real. I like to be real.
Thank you very much. I think what you would find from us in the next 6 months is a very strong focus on technology. You would find an exchange that is doing a lot of work in being able to attract technology companies and being able to be a base and a basis for capital formation for tech companies. Also, what you would find in the next 6 months, there are a couple of deals and transactions that we are hoping will come to the market. These are landmark transactions that we think should reinvigorate and revive the markets, particularly the retail segment of our markets. And then, of course, the third thing is a lot of advocacy. We are putting events together. In the next 6 months, there should be quite some activity from the exchange, working with a lot of the policymakers to really try to situate the capital market discourse, make it front and center, and really try to put some of the pressing issues, I think, throw it in the open for policymakers to make decisions around. I think it's really what the next 6 months looks like for us. And then speaking broadly away from that, really the deeper questions around how do we get more listings to the exchange? How do we open up the depth and liquidity of our trading? These are questions that we'll be looking for answers to as we go through the course of next year.
And so we'll be looking out for those in the next 6 months. Thank you so much, Mr. Temi Popola, the Chief Executive Officer of the NGX, and enjoy the rest of your day.
Thank you for having me. You too.
You're welcome. Yeah. So let's do an opening call to the markets now. Here is Will Ibong. Hello, Will.
Hello, good morning, Ini.
Good morning.
It's a bright Monday morning, and we just spoke about the NNPC's Limited. I hope you're looking to buy shares there.
I am waiting for them.
I'm sure the impact will be very large on the capital market, especially for equities. Well, before we go into equities, we'll jump into the Forex market, where the total turnover of transactions for the week ended September the 30th stood at about $1.4 billion there, from representing a 12.13% decline from 1.58 billion traded in the previous week. You see that the investors and exporters window, there was a total transaction. The total transaction was at $685.17 million. And when compared to the previous week, this is a decrease of 10.05%. At the NAFEX window, we also saw a drop there by 0.16% against the dollar to 413.14, 413 naira 14 kobo to a dollar against 412 naira 48 kobo to a dollar that was traded in the previous week. At the fixed income market, We see that the bonds market traded with mixed sentiments because of inflows from bond coupon payments supported by demand levels, despite sell pressures observed at the slight uptick in bonds and NTB auction stop rates. Overall, the average yield fell by 3 basis points to 11.2% across the benchmark curve. We saw that the average yield declined at the short, the mid, but it rose at the long end there. And for the Treasury bills secondary market, we saw that there was bullish sentiment closed on a very bullish note. Average yield fell by 32 basis points to 5.3%. And we observed some interest across the NTB curve, especially for the September 2022 paper there, which stood at 12 billion naira. I want to talk more about what's going on in the fixed income space and the forex market. We have Taiwo Olajubo. She's a fixed income dealer at Access Bank. Good morning, Taiwo.
Good morning, Ru.
It's good to have you this morning. So, speaking of what's been happening last week, we're trying to assess what's going on. How would you assess the performance at the forex market last week?
Okay, for the FX market last week, I mean, rates were pretty much at the 413, 412 levels at the official investors and exporters window. The CBN conducted the usual bi-weekly retail auction on Thursday, given the public holiday on Friday. Also, the CBN has also maintained their intervention for the foreign portfolio investors, which happened on Monday and Wednesday. Besides that, market was relatively stable at 412, 413 levels.
Oh, now we're going to jump to the fixed income space. We're seeing uptakes, especially on the long end. How are investors reacting to these recent increases in the option stop rates, especially at the NCB primary market?
Okay, so for the NCB primary market auction, I mean, last week, 111 billion was on offer, and we saw the rate on the long end, that's the 364-day view, inch up from 7.2 at the previous auction to 7.5%. So the expectation is that yields would continue to go up. Moreover, market liquidity is a bit thin. So we expect that there will be bearish sentiment in the market this week, which will lead to an uptick in the rates. We don't expect a primary market auction this week, but we expect one next week. And also for the OMO auction, I mean, the CBN has been conducted in 2 weeks. So, I mean, it's possible there will be an OMO auction, although in that case, rate has remained relatively flat, the 1 year at 10.1%, and the short and medium tenor too have remained relatively stable.
We'll talk about the liquidity in the market. It's been quite good since the FAC inflow. You want to talk about that? How's the liquidity system?
Yeah.
I mean, the system right now.
Last week, I mean, there was FAC inflow of about 355 billion, and there was also the retail auction refund. But on Thursday, there was an OMO. There was the bi-weekly retail auction conducted, which mopped liquidity in the system, and we saw rates at about 15% for OBB and overnight. But opening this morning, liquidity is about 190 billion. So, and there's nothing significant happening this week, save for the special OMO maturity, which is an in and out. We don't expect any significant flow into the system, so we expect rates to be at about 14% levels this week.
Thank you so much, Taiwo. Forgive me for that, for your input on the program. I guess I was too excited. Now, we'll move over to the equities market, where the market ended very positive, and I'm very, very excited about this because the fantastic run we had last week, though the week started almost negative, but we saw them make it to the finish line in record time. Despite the shortened trading week because of the Independence Day holiday, the bullish momentum in the local bourse gained steam as the all-share index, which you see here, gained 3.23%, and it rose to the 40,000 level as we see there. We've not had that since February 2021 this year. Interestingly, the gains recorded in the last 2 trading sessions, which was on Wednesday, 1.9%, and Thursday, which was about 1.6%, drove the market to the green territory for the week. Most importantly, investors buy interest in Dangote Cement, First Bank, Nestle, Flour Mills, Okumu Oil, and GT Co drove the benchmark index 3.2% higher, and the market capitalization was at 3.57%. Activity levels also mirrored the gains the upbeat performance as volume and value traded increased by 73.2% and 17.9% week on week. And we're seeing also that the month-to-date return turned positive. So we're now standing about 2.6%, while the year-to-date loss moderated to 0.1%. Over to the sectoral performance there, we see for the insurance index there, we see that all other key indexes recorded gains, which reflected the overall market performance. However, the reports we're having at the listed OTC markets is not very impressive there. The NASD Securities Index and the market cap closed the week negative. It was down by 1.3%, standing at 733.06 points, and the market cap was at 637.16 billion naira. We're saying that overall, almost 10 billion units was traded last week, and the value was 12.25 billion naira and deals in over 100 deals. So, Ini, we would love to continue this, but we'll just end this for today. That's all well,
I sure hope that the positive sentiment that ended the week will spill over to this week, and it will be sustained.
I'm looking forward to that.
I am looking forward to that too. Well, thank you so much. We'll talk to you later. All right, so we'll take another break now. When we come back, we'll do an opening call to London. Do stay with us. It's Business Morning on Chancellors Television. You're welcome back. Well, as at yesterday, retailers said that petrol supplies in the UK were still not getting to London and southeast England, with more than a fifth of forecourt still dry. Well, we have Juliana joining us from our London studios now to bring us up to date on what the situation is like at this time. Good morning, Juliana.
Good morning, Ini.
Good morning. Well, you have, we had the visa to 5,000 drivers, the proposal to get the army involved. What's the updates when it comes to this staff and supply shortages situation?
Well, according to government ministers, it is stabilizing. We know that about 200 military personnel have finally been deployed, including 100 drivers who will drive the fuel to the stations. But of course, if you are a motorist, especially if you're in the southeast of England, as you said, and in London, you are still struggling to get fuel. I managed to get some fuel, I've got to say, yesterday, although it was a diesel engine, and there didn't appear to be any queues, but you know, this is not the same for every driver, and still, if you go on social media, people are still struggling. And it's not just fuel, as you said, there are scarcities everywhere. And last week, I think because the Labour Party conference was going ahead, the British Prime Minister managed to duck and dive away from some serious questions. That is not going to be the case this week, because of course we've got the Tory Party conference taking place in Manchester. So lots of people are going to be asking very serious questions. Already over the weekend, the government have had to U-turn on this 5,000 visa supply to European drivers. They were giving a couple of months visas going up until Christmas Eve, but we know there are going to be supply issues which are going to be far further than that, up until the new year. So they've been extended until the end of March. But there is fierce competition because, of course, Europe and the rest of the globe are already grappling with their own shortages. And so is this going to be enough to get migrant workers here in the UK? Some say not.
Well, I will say we'll seriously be looking forward to the question and answers to find out from the minister, to find out what the plan is actually. Well, talking about Chancellor Rishi Sunak is set to unveil more than £500 million in new funding to help Brits get back to work. Do we know the details of this fund?
Yeah, we are going to be hearing from Chancellor Rishi Sunak, as I said, the Tory Party conference. Big news, actually, this week is taking place over the next couple of days. Chancellor Rishi Sunak will be in the spotlight giving his keynote speech about his plans for jobs, which was a big plan that was announced in the run-up to knowing that the furlough scheme was coming to an end. It ended last week. That secured the jobs for about 11 million people, cost the taxpayer about £70 billion. When it ended last week, about about 1 million people were still relying on that scheme to pay their bills. And it's not sure whether or not they are going to be able to retain the positions that they had beforehand, which is why the Chancellor will unveil later today this £500 million scheme. This is supposed to be something that will last about 3 months, that will help retrain people, will help them apply for jobs, help them write CVs, skills that the Labour Party say are just not good enough, that it needs to be much more applied. But there will be detail spelled out by the Chancellor, and hopefully by the time we discuss again on BizInc, I'll have those further informations for you.
Yeah, I will certainly be looking forward to that. Thank you so much, Juliana, and enjoy the rest of your day.
Thank you.
So we'll take a peep into the crypto market while Ladi is on vacation. Well, we'll just see what's happening in that market. The global crypto market cap is $2.11 trillion, and that's a 0.99% decrease over the last 24 hours. The total crypto market volume over the last 24 hours is $88.72 billion, which makes a 10.83% decrease. The total volume in DeFi is currently at $14.42 billion, a 16.25% of the total crypto market 24-hour volume. The volume of all stable coins is now $69.57 billion, which is 78.41% of the total crypto market 24-hour volume. And Bitcoin's price is currently $47,000, 694.72. That shows a 0.16% low in 7 days, but the days up over 9% when it comes to 7 days, and in 24 hours, even though its dominance has increased by 0.29% in 24 hours. The Bitcoin dominance is currently 42.59%, an increase of 0.29% over the day. Meanwhile, the 24-hour volume of Bitcoin is about $25.9 billion. Let's also look at Ethereum just before we have our conversation. The price of Ethereum is currently about 3,356.45. That's about 8 a.m. this morning. It lost 1% in 24 hours, but gained almost 9% in 7 days. Its volume in 24 hours is almost $15 billion. Let's have Olumide Adesina joining us now to tell us what's going on in the markets, what's the color of the market. Hello, Olumide. Good morning.
Yeah, good morning. Thanks for having me.
Great to have you. So how was the weekend? How is the market this morning?
Yeah, the market seems to be relatively stable, knowing the fact that a couple of days ago, the clampdown by the Chinese really rattled on the short term, but the momentum seems to have changed, and we can see that Bitcoin is comfortably higher than the $45,000 mark. And just to show you systemic importance, the IMF recently released guidelines on how crypto assets would be managed, especially in terms of transaction across emerging markets. And the rationality behind it is just that they are seeing that crypto market is becoming systemically important. And that really tells you that the market is here to stay. And you also understand that the INA, for example, Nigeria, Africa's first central bank digital currency, also released guidance that shows that it will also have transaction functionality with other CBDCs. So what it means is that for now, you could use your INA to transact with other currencies that have that proprietary function. Then also, the market is now maturing, given the fact that we are seeing more institutional investors, and that is why price volatility is not like what we are seeing before. So we expect that this week the market would stay not too, there will be not so much price swings, except what comes out from the United States provision bill, which people are saying that might not cause a local bubble, because right now I think the momentum is with the bulls.
Okay, but you know, the IMF talked about the crypto market, I think that was on Friday, saying that it needs tougher regulation. Is that part of the maturity you're talking about that the market has attained?
Yeah, most of, but I think if you read deep into the report, the IMF was talking about fair regulation, and that was and what fair meant that we should not the systemic providers of these assets and the ones that it should not really attack these things with so much legality. And the fact that they look at the gains at which the crypto asset is bringing into the ecosystem in terms of they have speed up transactions and also it drives the emerging market economy. Take, for example, Nigeria. Nigeria has a high dollar exposure. So I think they are looking at the fact that regulation can be proportionate based on the risk it brings in. And that is really a decent model. Also, they are also considering the fact that some countries, especially El Salvador, that has taken Bitcoin as a legal tender, is showing might have suffered some volatility in their economy because Bitcoin is more volatile than fiat currency, no matter how you look at it. And the fact that Brazil recently announced the fact that they will be looking at that option tells you the fact that the framework is very important before other countries start jumping the wagon, because that can affect the financial stability of the ecosystem.
Well, back in Nigeria, where we're still waiting on our CBN for the e-naira, are you looking out for that?
Yeah, I'm really excited to watch it because I think we should look at the positivity around it. It's going to increase financial inclusion. It's going to reduce transaction costs. A lot of Nigerians have been complaining about the fact that they get debited at alarming levels with traditional currency. This would definitely solve that. And also, it will definitely increase leverage in places where the banking infrastructure is weak. I'm talking of rural areas in the economy. So it's something that we should really look about. And the fact that this is the first project in Africa tells you that Nigeria is becoming a creative entity. So it's something I'm excited about, despite concerns about privacy. But trust me, these things can be worked through in the long term.
Okay. All right. I'll take your word for it, and we'll be waiting for the CBN. Well, what coin are you bullish on, and what's your prediction or outlook for Bitcoin for the week?
Yeah, my outlook for Bitcoin is pretty simple. I think Bitcoin will stay above 45 in the next couple of days, except we see a damning report or we see the dollar resurging. But I think interesting crypto assets to watch out are the Ethereum rivals, Solana, Tezos, Algo, and gaming tokens. You need to see the fact that NFTs have gained momentum. So the fact that people are seeing that platforms that offer cheaper transaction costs and these options to build, because Ethereum is the giant killer in the ecosystem, but the transaction cost has really scared many of these developers and investors. So they are moving to this chain, and that's why they're seeing the price of Tezos, Polkadot, and these substitutes going up. So it's something I'm really looking at. But in the long run, I think the market would stay fair.
All right. Thank you so much, Olumina, additional financial markets analyst, for bringing us up to date on happenings in the market this morning. Enjoy the rest of your day.
Thank you.
So that's it on the program. Thank you so much for being a part of it. At 1:30, Business Incorporated will be here for more updates from the world of business. I'm Ini John Mekwa.